Everything fluctuates. So if you're going to enter that market and you're afraid of that, if you're going to respond emotionally and irrationally to that, then you probably should not be in any of those markets. Hey folks, Colin Richards here. I'm president and founder of Lord & Richards. And once again, I'm excited to be with you on this episode of the Lord & Richards Show. And today we're going to be addressing a topic that is very front of mind for a lot of people, and that is navigating market volatility, market declines. And I could drop this segment into just about every year and have a time when it would be completely appropriate, because there is a constant stream of fluctuations going on in the markets. Recently, the New York Times had this headline: job market slows significantly, raising economic jitters, right? So jitters, what does that mean? That means fear. We're going to talk about fear. U.S. employers in this article added far fewer jobs than they were expected to. Far short of forecasts. Unemployment rose to its highest level since 2021. Fear, jitters. Market sell-off. J. Pierpont Morgan of railroad fame years ago was accosted by a young man who was looking for all the answers, and he managed to break through the crowd and get to Morgan and ask his vital question around why markets were doing what they were doing at the time. And Pierpont Morgan famously looked at him and said, "Young man, I believe markets are going to fluctuate." Now that is the truth. Markets are going to fluctuate. And if you are entering the market with an expectation that they will not fluctuate, whether we're talking about stock markets, bond markets, commodities markets, the treasuries, all of this fluctuates. There is no place of absolute certainty in this life, okay? Everything fluctuates. So if you're going to enter that market and you're afraid of that, if you're going to respond emotionally and irrationally to that, then you probably should not be in any of those markets, okay? That's sound advice. Alfred Coles, the famous mathematician, also famous for his short quotations, quipped, "People want to believe that somebody really knows." Isn't that the truth? People want to believe that somebody really knows. We want somebody that's advising us to be omniscient. And the reality is that belongs to God, right? Only God knows everything. People will ask me questions that involve predicting the future, and I will kind of symbolically reach under the table and say, you know what? Somebody stole my crystal ball, and I am no longer able to prophesy your financial future. Well, folks, that's not the way to build and develop a sound economic strategy. Whether you're just living your life and enjoying it and wanting to make sure your finances are in good shape, or whether you're planning, preparing, and building for a future of financial independence, which is what we do at Lord & Richards. What we do isn't just look at these short-term swings. We build a long-term strategy to help you achieve financial independence. What is that, Colin? Well, that is doing what you love with the people that you love for the reasons that you want to, in the places that you want to, and never having to go back to work to pay for it. That's financial independence. I hope you agree. So why the emotion right now? Why are people suddenly re-emotionalized? Because I'll tell you, most of the conversations I've had have been around, hey, can you get us more growth? Can you be more aggressive? And it is amazing to me how quickly people swing and say, what are you doing to make sure I don't have any losses in my portfolio? First of all, that's a wrong perspective. But let me explain to you why this is going on, and explain to you also why I cannot tell you, nor can anybody else, the exact reason why this is going on. These are guesses. So perhaps it's the shift in focus that the markets have, a collective mentality. When we say the market, it is the collective behavior of a large group of people, a really large group of people. So we've shifted maybe focus from inflation, which has been doing much better, to jobs. So now instead of always reacting emotionally to the inflation number, now we're going to react emotionally to the job market to make sure that we didn't overdo it with interest rates trying to hold down inflation. Or some people have suggested, well, the markets are upset, because the Fed didn't immediately respond to this poor jobs market report and higher unemployment by immediately dropping rates. And folks, the truth is the Fed has a long-term perspective. I hope they don't respond the same way that markets do. Maybe, number two, there's a concern about weakening corporate earnings, right? Maybe companies aren't doing as great. Well, think about it. That was the whole point of the interest rate hikes, to cool down inflation and cool the jets of companies that were overproducing, raising the prices, and to cool down the jets of consumers who were overbuying and also raising prices as a result. Number three, we've been dealing with international conflicts now forever. And right now we have two that are going on, and we're always worried here in the U.S., how will that affect our commodities? How will that affect our economy? So maybe that's it. Or here's one that was suggested. Why does Warren Buffett hold so much cash right now? Why did he sell out of his positions? I don't know. Why don't you ask him? Or somebody is going to suggest in any conversation, well, it's the election. People are just nervous because this is the worst. You know what? Every election these days has been magnified out of proportion to where people say this is going to be the worst thing ever and it's going to destroy my portfolio. I can show you data that points to the truth that the most favorable outcome from an election for the markets is a divided government, a government that literally can't get anything done. Markets love that because it doesn't change the plays. It doesn't change the rules of the game. So is that really what we want? And then finally, the real bad one, the one that I'm sure all of us could explain just like this, is the unwinding of the Japanese yen carry trade. You got that one? I won't even bother to explain it. Okay, so there's 6 possibilities. I like what Jerome Powell said as head of the Fed chairman. He said, "We are navigating by the stars under cloudy skies." That's the truth. Nobody does know. That's the spoiler alert. Nobody knows for certain. And should that make you panic, terrified? Well, if it does, you should remove your money from the market and never put it back in. But then you got another problem, right? Where are we going to get growth? Now, if you truly are completely risk averse, there are still options for you. I want to give you a little bit of hope because I have clients who have literally told me, Colin, I just can't handle it. I know what you say, I know what you teach, and I just can't handle it. Okay, well, we can build a plan and strategy around whatever level. We want to teach, we want to instruct, but at the end of the day, we want to build a plan that allows you to sleep at night. And that's exactly what we're doing through our financial independence review process. Every day, we're talking to people just like you who need a plan for financial security through the elder years of our life, through our retirement years, so that we can retire without worry and do amazing things with the resources in our hands. It simply starts with a phone call.